U.S. stocks open lower as a record-breaking year winds down. New York, AP, stocks are off to a mixed start on Wall Street on the last day of 2019. Many world markets, including Tokyo's, have already ended trading for the year. The S&P 500 is on track for its best year since 2013. U.S. markets are open for a full trading day before the New Year's Day holiday on Wednesday. They reopen Thursday. The S&P 500 was little changed at 3,221. The Dow Jones Industrial Average was also flat at 28,459. The Nasdaq composite rose 3 points, less than 0.1%, to 8,950. Bond prices fell. The yield on the 10-year Treasury note rose to 1.91%. This is a breaking news update. AP's earlier story follows below. Stocks slipped globally in quiet New Year's Eve trading Tuesday with many markets closed. Wall Street could close 2019 with back-to-back daily losses in a year that the US posted the largest market gains since 2013. Britain's FTSE 100 slipped 0.4% to 7,553 in midday trading, while the CAC 40 in Paris shed 0.1% to 5,977. Germany's markets were closed. Wall Street appeared headed for a slightly lower open on light trading. The Shanghai Composite Index gained 0.3% to 3,050.12, reversing earlier losses, after the government released a monthly survey showing Chinese manufacturing held steady in December. But elsewhere in Asia, Hong Kong's Hang Seng Index lost 0.5% to 28,189.75, while in Australia, the S&P ASX 200 declined 1.7% to 6,647.70. The Shanghai Composite Index gained 0.3% to 3,047.54. India's Sensex shed 0.2% to 41,463.61. Shares also fell in Taiwan and New Zealand and were flat in Singapore. Many markets, including those in Tokyo and Seoul, have already ended trading for 2019. Markets will be closed on Wednesday. Strong manufacturing data from China appeared not to do much to counter the prevailing selling sentiment. The official Purchasing Managers' Index for December held steady at 50.2, even with the month before, and the second straight month of expansion on the scale where below 50 indicates a contraction. In U.S. trading, the benchmark S&P 500 has risen 5 straight weeks, notching multiple all-time highs along the way. It's on track to end December with its fourth consecutive monthly gain. Technology, communication services and healthcare stocks accounted for much of the selling Monday. Retailers and other companies that rely on consumer spending also fell. Homebuilders fell after a report on pending U.S. home sales in November came in below analysts' expectations. Shares in utilities and real estate sector companies fared the best, ending with only tiny losses, as investors shifted assets to high-dividend stocks and other bond proxies. There could be a few big institutions out there that are taking some profits, said Randy Frederick, Vice President of Trading and Derivatives at Charles Schwab. Big players can have a bigger influence. For more on this story, visit the news article link.